what these three companies are targeting is something called artificial general intelligence, or AGI, which is like the super state of AI where it becomes kind of conscious, and it's the next step towards being more human-like. And we don't know whether this can be achieved anytime soon, when it can be achieved. And if they fail to achieve it, then big AI winners will be the Googles and the Amazons and those hyperscalers.
Markets, they are ready. They have appetite for equity-funded AI capex.
On this episode of Early Bird, what do the SpaceX, Anthropic, and OpenAI IPOs mean for retail investors in 2026? Joining us today on the podcast to discuss this topic are Alex Liss, Chief Investment Officer at SDV, and Igor Pejic, author of Tech Money. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. SpaceX just went public with the largest IPO valuation of about $1.77 trillion. The stock itself surged over 19% on its first day of trading. Anthropic and OpenAI are both also poised to go public later this year. What does that mean for retail investors? Should retail investors participate in the big tech IPO frenzy of 2026? We've assembled a roundtable of experts to discuss the topics at hand. I want to ask you both about what we're seeing here with SpaceX and later on with Anthropic and OpenAI. Igor, I'll let you start. What do you make real quick of what we're seeing with the SpaceX IPO and what it means for retail investors potentially?
Yeah, so it means a lot of things. And first of all, I'm very thrilled and very excited to see this happen, not because of the epic proportions and the size of the IPO, also not because it makes Elon Musk the first billionaire in human history, but because SpaceX is kind of opening up or unlocking a new frontier, which could possibly be the largest technology market in history. So there's huge potential there. But at the same time, for retail investors, what they should be looking at is also hard facts, hard numbers, and to see if their investment that's really the best investment asset to put their money into, because quite frankly the stock is overvalued, and there's a lot of questions of how do you value such an extreme growth stock, a tech stock, and we can talk about this in more detail later on. But by all metrics, it is overvalued, and the question is how fast will you get your returns, and especially how stable will the company be, and what's the likelihood that you're getting those returns back. So I am quite skeptical on SpaceX with this valuation, but overall I think it's an extremely exciting time. It's basically science fiction happening in front of our eyes, and it will really unlock an entire new space economy, which will give us many better opportunities of companies that maybe most of us don't know today, but it's definitely going to be an exciting new technology market that we're heading to.
Good point, Igor. A little bit of skepticism, a little bit of excitement into the milestone and what this means. Alex, I want to bring you into this conversation. I know Igor just mentioned, as it relates to SpaceX, the valuation, and the valuation itself could be considered high. Would that justify demand for people who want to buy the stock?
I kind of agree with Igor when it comes to valuation, but I believe that this IPO, aside from just SpaceX, it sends an important signal to the market. The IPO was, it was just one day, but I would consider it to be a success. So the 20% first day bump for me is a perfect thing. So it didn't fall because it would indicate weaker demand, right? But it didn't also pop like 50%, 100%, etc., which would indicate kind of speculative, unsustainable demand, like Figma, right? So, I mean, the main message for today, at least for me, is that markets, they are ready. They have appetite for equity-funded AI capex. So it means that like the party is continuing, like that the trends we observe in this year in semiconductors and technology stocks are still valid, which is a good signal. Yeah,
It is.
that would be my take.
Certainly, the market can still be seen as healthy right here by some. Do you want to tell our listeners, in terms of your decisions of whether to buy these stocks or any stocks out there, please speak to a financial advisor who can give you good information about what to do with your position. Looking beyond just SpaceX, as we know, Anthropic and OpenAI could also go public this year as well. I want to ask you, Alex, are investors buying right now into this explosive new growth runway, or are we simply providing a high-priced exit for the early venture capitalists at historically unprecedented valuation multiples?
So the biggest story of what you're mentioning of IPO just providing an exit liquidity was, I believe, Meta or Facebook, all right, when they IPO'd. And I believe that the structure of IPO, of investors selling on IPO, is different for SpaceX than it used to be for Facebook, which was quite unusual, which had unproportionately high share of VC investors selling. It's not the case for SpaceX, as far as I know. So maybe at the end of the day, we're gonna see like a crash of SpaceX with venture capitalists cashing out, but it's not the picture that I see at the moment.
I see. Igor, what do you think? You think this is an opportunity for growth for the average investor, or are we just simply paying big VCs to have a big successful exit from these companies?
Yeah, it's certainly been framed as a big growth story, as exponential growth potential. But I think this is actually a misrepresentation of what it really is. And how can you say that? Well, all you have to do is to look at the incentives that Elon Musk got. So if he can get 200 million shares, if he achieves two things. One thing is putting 1 million people on Mars and establishing a permanent colony there. And the second thing is to bring SpaceX to a valuation of $7.5 trillion. Now, that would mean that, you have to do something that has never been done before, go to a planet, bring 1 million people there, only for your value to go up 4 times. So this is a tremendously, small payoff for something that seems so incredibly difficult to achieve. And there are many other better growth opportunities that require much, much less stars to align, to use its space metaphor. If you look at the number 2 in the space industry, which is Space Lab, I mean, over the past 2 years, they grew by 3,900%, right? This is a completely new dimension or a different dimension. And they, basically didn't go to Mars. They didn't build orbital compute and all of those other science fiction ideas that Elon Musk has presented. Or also Intel. Just within 1 year, they grew by 460%. And they didn't engage in any new emerging or frontier technology. All they did was they stuck to what they have been doing all the time, which is just cranking out CPU chips. Of course, they had a certain period of luck where there was a shift in the AI race, but that's much more likely to happen than, let's say, all of the things that SpaceX would need to happen in order for them really to dominate the space economy at such a scale as to justify this exponential growth. So yes, there will be growth there ahead, certainly. The question is it justifying all of this tremendous downside risks that SpaceX is coming with? And I would say rather not.
I see. So you're looking at the bigger picture, looking at where SpaceX is and what they're doing compared to other peers in the space and what they're doing with the new space economy. It's interesting. As you know, for many retail investors, individual stock picking is not the way to go. It's in index funds and ETFs. There's been a lot of talk about SpaceX and where it might fit with regards to index funds, and eventually those same conversations will come up with Anthropic and OpenAI later this year, assuming both go public. Some index funds are buying SpaceX, but their inclusion and the speed of those purchases depend on the index fund. Some are fast tracking to include SpaceX, and others are not fast tracking to include SpaceX immediately, but will eventually include SpaceX in the future. So there will be some sort of mandatory, massive rebalancing by passive index funds to accommodate these large titans in the future. Igor, how will this sort of rebalancing of index funds impact the rest of a portfolio's large cap tech holdings?
It will certainly have an impact, right? Because the cake is not getting bigger just by a new company entering, so it will compete for the same funding, which means the index funds will have to sell some of those big tech shares that they have and then buy SpaceX, which will of course cause some pressure. Now, analysts say that it's going to probably be marginal. Some put the figure at 0.1 to 0.3% in lost returns. But I think the bigger or more important point is that any kind of impact this has is purely on the share price of the company, which means that it doesn't impact the underlying business. Just because there will be this rebalancing, I don't think that Apple will sell less or fewer iPhones, or that Amazon will make less money with AWS. So if you're a long-term investor, as I think every tech investor should aim to be and strive to be, then you probably won't feel any impact on your returns. Of course, on the short term, it might add some pressure, but again, it won't trickle down to the real underlying business, and that's the important thing to keep in mind.
I got it. So
I would add here just a little comment that those rebalancing, they are probably will be front run. Yeah, but by funds with such strategies. So probably this process is already happening.
I see. So you're saying, Alex, it's already underway. On this note of index funds, I wanted to ask you, Alex, is still a good opportunity for investors to get some exposure to a SpaceX and eventually later Anthropic and OpenAI without having to directly buy the stocks, buy the shares of these enormous tech giants?
You mean by
buying the index funds that may get exposure to SpaceX and some of these other companies instead of buying them directly?
Well, if you ask me if for retail investor buying an index fund is a good idea, I would say yes, 10 times out of 10 times, right? Because like for 99%, the best idea is to just buy an index fund and call it a day, right? But I would give a slightly longer answer to that. For me, like my approach of like of modeling this extra equity supply to the market would be like to factor in to calculate the change of net new supply. By net, I mean like a supply of IPOs, additional offerings, minus buybacks. So because big tech companies, they are not just doing additional offerings, they also reduce or expected to reduce buybacks. And so if you calculate this extra net supply, you would see that by the end of 2026, it would still be less than it was in 2020, in COVID times. So on this, from this point of view, it's not extreme. But on another hand, in 2020, we had this COVID stimulus, monetary stimulus, which we don't have right now. So it is a big question if the markets could digest all this net equity issues. I guess time will tell.
Yeah, we'll have to wait and see how the market reacts long term. It was great for the first day of SpaceX and its IPO, but one day of a stock going public does not tell the full story over time. We'll have to wait and see.
Definitely. Well, so far so good. As I said, the IPO for me is a success, and so far it validates the big thesis. But we're gonna see if it's gonna stay the case throughout this mega wave of mega IPOs.
I see. So looking at some of these stocks, in particular SpaceX, I always say to investors, one of the reasons if you want to buy directly into a company and buy their shares is to get voting rights. But we noticed with some of these large IPOs, in particular SpaceX, that's not always the case. With SpaceX, Elon Musk still controls the overwhelming majority of the voting shares. I want to ask you, Alex, am I comfortable paying a steep premium for shares that grant me zero voting power, or corporate say in companies that are structurally designed to keep absolute control with their founders?
Well, if I would say that if you for some reason, if you have reasons to don't trust Elon Musk, you just don't buy SpaceX, neither SpaceX nor Tesla. So of course there could be potential, conflict of interests, and you wanted not to vote yourself, but maybe you want some activist funds like Elliot to buy a stake and run activist campaign, which would be hard right with SpaceX. But I think that it is either it just comes down to your trust. Either you believe in Elon Musk and his story, his genius, whatever, or not. I think it's as simple as that.
I got it. So it's really coming down to believing in Elon or not, and that might be the ultimate factor in weighing whether somebody buys SpaceX, for example.
Well, it doesn't sound like textbook in investors' way to value stocks, but I think it is definitely a factor. It have been a factor for Tesla stock, and see the ones believing in Musk were rewarded, and I think it would be maybe even bigger factor for SpaceX.
Got it. Good point. Igor, I want you to take us home. You talked a little bit about valuations earlier in our discussion as it related to SpaceX. Talk a little bit about Anthropic and OpenAI. Both are not going public tomorrow or anything like that, but they could likely go public this year. Are they also going to have the same valuation concerns for the average retail investor, or are we talking about something entirely different?
Yeah, so they are going perhaps public this fall, maybe this winter. And in terms of the valuations that have been circulated, it's about 1 trillion, so it's significantly smaller than the SpaceX one. But they're kind of different because on the one hand they're more focused, right? So they're purely AI. They don't have the whole space, robotics, telecommunications aspects to them. On the other hand, I think that they are very identical in terms of their behavior and their aspirations. So a lot of technologically and business-wise, very tricky and very complex things have to align for them really to be a good bet long-term at these valuations. Because quite simply, what these three companies are targeting is something called artificial general intelligence, or AGI, which is like the super state of AI, where it becomes kind of conscious, and it's the next step towards being more human-like. And we don't know whether this can be achieved anytime soon, when it can be achieved. And if they fail to achieve it, then big AI winners will be the Googles and the Amazons and those hyperscalers. So they are also relying very heavily on extreme growth hypotheses that again rely on technological advances that we can't foresee. There is no model that will tell us when we will get to AGI. But of course, in terms of hype, Tesla again has again the advantage, but Anthropic is not far away. If we look what Anthropic did recently, first they came out with the new Claude model that led to this software apocalypse on Wall Street at the beginning of the year. Then later they released their Olympus model, which of course was hyped a lot, that it can break all kinds of software vulnerabilities and break all kinds of security mechanisms. Then they had the row with the Pentagon. Then they presented the new letter of the Pope in the Vatican with them. So there's a lot of so Anthropic is also very, very capable of capturing the headlines. Not at the level of Elon Musk, but they're definitely much stronger in this even than OpenAI. So I think they will be a bit bigger and more successful over the time. But I think it goes pretty much in the same direction, and they're riding the same hype cycle. And investors have to be careful that there's a lot of different hypotheses that have to work out in order to justify this valuation, and in order to really see a good return, a return that you cannot just get with a regular index fund.
Thank you again to Alex Liss and Igor Pejic for sharing your insights on the big IPOs of 2026. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.